Today, you open an app. You see a stock going up. In 3 seconds, you buy. That's the major problem. Unlimited access creates a dangerous addiction to trading. Your phone becomes a wealth-destroying machine. Winning investors? They don't have this luxury. Think about this number for a moment. Every impulsive decision steals a part of your future wealth. Not just today, no, tomorrow too, and the years that follow. Moreover, a single bad transaction costs more than 100 good decisions. It's mathematical. The impulse becomes compound interest in reverse. Count them. 8 sentences exactly. The wealthy operate differently. They wait. They study. They decide. Not the reverse. Warren Buffett spends months without buying a single stock. It's intentional. This discipline transforms everything. For example, limiting your decisions forces your brain to truly choose. You become selective, and that's where true wealth is born. Imagine this. 2,000 car manufacturers existed in the last century. 2,000! Today, only 3 truly dominate the global market. You see, predicting that automobiles would win was easy, but betting on a specific manufacturer, almost everyone was spectacularly wrong. By the way, look at aviation. 400 aircraft manufacturers have tried their luck since Wright and his beginnings. 400! In fact, practically none generated sustainable profits. The industry itself was fascinating, but understanding who would dominate, that was impossible for most investors. Now, compare that with Coca-Cola. For 117 years, this company has served 1,100,000,000 servings every single day. Why? Because its founders viscerally understood consumers. They mastered their arena completely. It's this deep understanding that creates real, lasting fortunes. Imagine someone extremely intelligent and full of energy, but without integrity, it's a disaster. In fact, this person becomes dangerous. Their intelligence turns into manipulation. Their energy channels toward selfish goals. 2 brilliant qualities become pure poison. Integrity isn't an optional bonus. It's the cement that makes everything else constructive and useful. Here's what nobody tells you clearly enough. The habits you develop today, at your age, become your walls at 50. Moreover, at that age, they're almost irreversible. You can still change, of course, but it's infinitely more difficult. Integrity isn't genetic. It's a habit you build now, every day, every decision. Ask yourself this question honestly. Who would you choose as a partner to bet your life on? Not your funniest friend, not the smartest one in school, but the one you can truly count on? The one who keeps their promises even when nobody's watching? That's your test. You now understand why integrity crushes all other criteria. Imagine this. In 1968, Fannie Mae was trading at $20 per share. Someone who didn't buy then missed out on $5 billion. Not a bad decision, mind you. A non-decision. They did nothing. And that's exactly what cost them an invisible fortune that no one ever sees. Here's what you need to understand. In your entire life, 2 or 3 real opportunities come along, no more. Moments when you clearly understand that you must act. Now, ignoring an opportunity that you truly grasp, that's inexcusable. Even worse, it's terribly costly. These windows close quickly. Now, take a small mistake at 30 years old, something you understood, but you let slide. In 50 years, the magic of compounding transforms that small mistake into a financial catastrophe. The math doesn't forgive. Each passing year multiplies your invisible regret. It's brutal, but it's reality. Imagine this. Interest rates are very low. You can then wait 20 years to recover your gains. In fact, when money costs almost nothing, patience becomes your best friend. The birds arrive slowly, but they arrive. That's why investors are willing to wait a long time during periods of low rates. The calculation changes completely. By the way, watch out for this. A technology company without real cash flow. Zero bird in hand, you understand. These companies aren't generating any verifiable money now, so no matter the future promise, the risk is enormous. Don't touch these traps. The bird must be concrete, not virtual. For example, an excellent company creates an implicit obligation. You almost accept a 200-year wait for your returns. Why? Because it's such a good deal that you wait indefinitely. In other words, quality becomes a golden prison. Properly valuing means recognizing this invisible limit.